Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Tuesday, the 23rd of April, 2024. Okay, so a lot of companies beat on the earnings, so this is the good news, and the interesting part was you had a good rally in the stock indices, in part because we had such a nice sell-off. And I use the word nice, and I'm not being facetious when I say that in any manner. This market needed a correction. Now, was that it, or is there more to run, is what everybody will ask themselves. The earnings so far are helping support the market, with one stock that I'm not buying into the concept. Tesla closed up 263, and in the aftermarket, it released its earnings, its numbers, its profit margins. They're a disaster. However, the magic of the genius of Mr. Musk. In the conference call, he comes out and he says he believes that the autonomous driving is going to be much sooner rather than later, something that might be ready at the end of the year. I have my doubts about that, but we'll see. But 2025, early part, he thinks that could be it. And I will admit, if he ever gets this done right, and that doesn't mean I'm negative when I say that. It's a really hard task he's trying to do. It revolutionizes a lot of things. I mean, imagine you don't have to drive. It's going to take you where you want to go safely. Can you imagine that? Changes the world in a big way. It puts a lot of people out of work. Taxi drivers, Uber drivers, just think about that too. There's a good and there's a bad, all right? The other thing is, you got to remember with Mr. Musk, he rarely makes his timeline. So while traders were buying this up, I'm going, why would they believe him? He didn't make his timeline on almost any of his products. The products get done. The boring company, the solar company, but they take time, lots of time to develop. He also said that contrary to a lot of talk, he is working on bringing in new lower priced cars. And that was pretty much all that he said about it. He didn't give us too much detail. They're not going to be this year. I can't imagine. He doesn't have anything ready to go. So maybe 2025, 2026. But traders, all they got to do is hear that and go, hey, this stock is down from where it's at. It's $140. I'm buying it. Okay. Again, the fundamentals of the company are in trouble right now, and that isn't going to turn around anytime soon. You need to get, even by his humble words, towards the end of the year to see if these products come about quicker. All right. So we then look and see how the markets reacted today. They were up. NVIDIA was up $29. Amazon up another one. And I did tell my traders today to liquidate some of the long positions in Amazon today, to cut back a little. And that's because on this rally, I don't know if the rally's real. All right. That's just a reality. We dropped a lot. Is this a rally to liquidate on, or is this a rally? Was this the break to buy on and hold? Well, you've got to get through the GDP this week and the PCE. And by the end of Friday, I think when I do my reports with you, I'll be able to answer my thoughts on that. When we look at the rest of the market, most of the market was pretty green, right? You don't have a lot of markets down. The copper was lower, the gold market, AMC down 3 cents, Boeing was down another $1.30. As their problems just don't go away right now. But there'll be a number that Boeing is very attractive at sooner rather than later. I don't know what sooner means yet, but it'll come about. Then we get to eBay, which has had a nice little bounce here, but it hasn't proven anything. The trend is up, higher lows, higher highs. Okay, I can live with that. But here's what I mean by it hasn't proven anything. It went back to what I call the line in the sand, which is the 18-day average of closes. Now, if you can clear this area here, it gets exciting. This stock can then move, and move could be something in the tune of $54 to $56. Okay, and from current levels, that's almost a 10% move. Where else? Well, you can see the first zone would be the upper Bollinger Band at 53.12. But the resistance is right here. You have the bias down, the trend up in the market, and momentum has flipped to the upside. But the bias down is still holding the market. When we look at Tesla, it's been riding its wave to the downside. Did we embed? So both numbers today were under the 20 level. Both numbers yesterday were under the 20 level. Both numbers on Friday were under the 20 level. So you're embedded. Now, for those that want to think this market can have legs, you've got to get, from my opinion, the red line to close over 21, and then you open the door for wherever that 18-day average is at this time. But the rally tonight, you want to look in the morning when we let the market open that first 20, 30 minutes in the marketplace. You can go after market and look where it's at, but remember, after market's not on the chart. What's on the chart is when the market opens at 8:30 in the morning, 9:30 Eastern time, and that's when the chart action starts plotting. If you lose the embedded reading, then I think you're on that. But if you don't, and you're only 17, 18, whatever the number is, because you're at a 10 reading, I think the pros will possibly sell this market. UGA, yes, it stopped right where it should have. The lower Bollinger Band gave you an outside day to the upside. So now until you take out this low, the odds favor you're going to go back to the 18-day average to fight a battle. In XLF, you're back to fighting the battle. That began yesterday at the 18-day average, and you've broken the downtrend. That doesn't mean you've started an uptrend. This has been a vertical price rise, but it hasn't spent a lot of its energy. The market's nowhere near overbought. So it's an interesting chart, but I don't see that one should deploy anything in that. When we look at XLI, I'm looking for the resistance at the 18-day average, and you did lose the bearish ability to embed. So that part is over in the market, and that gives it a little more upside as well. In Freeport, I was looking for more of a break, and I got it. I got everything I wanted down to the lower Bollinger Band as a charter. So I was saying up here, be careful when you lost the embedded reading right here, that I thought you'd go to the 18-day average, and then with the extension down yesterday, if, and that's the big word, if it went further, you open the door for that lower Bollinger Band, and the trend and the bias were already down, and now I think professional traders are covering shorts. In RSPD, the battle line should be the 100-day average. The market often fights battles at the 100-day average the first time you hit it. And you hadn't hit that 100-day average. Just take a look back here. You got to come all the way back up to November. So getting under it, yeah, but staying under it's very difficult the first time. In XHB, so the home builders came out, and some of them are doing just excellent. They've bought down. Pulte was talking, the CEO of it, and they were mentioning that you can get mortgages through them at 5.75%. They've got a backlog. They've got spec homes. So they're in the right place at the right time, doing the right things at this point in time. And we'll see how this market might want to do. What happened today? You lost the bearish embedded reading. So this market is saying that unless it just lets go on the downside tomorrow, price and the 18-day average, the red line, are likely to come together now. On the energy, you keep hitting the resistance of the 18-day average. Can you get over it? It's going to be the question. Have to settle over it to say, the bull play could be back at work now. In the gold market, this was all I was looking for, was a retracement after you lost the embedded reading right here to get back there and regroup. And that's what I think gold's going to do right now, is regroup. And I think silver's the identical play. Same thing. Copper, identical. So I'm thinking the metal markets, and I know right now they're in downtrends, they're under the averages, but I don't think there's any real downside in them at this point in time. What could make me wrong on that, and by the way, I'm not saying to be a buyer on any of these at all. What could make me wrong in my thinking is what? Well, I don't think it's wrong. Number one, I happen to think PCE is going to come in strong. So I'm of the opinion interest rates are going to stay up. But what could make this market turn around? Weak GDP, weak PCE. Fed says it's going to cut interest rates. Traders will say, no inflation pressure there, and maybe gold gets another bid. TLT, short covering setting into the market. You see that. You lost the bearish embedded reading. BND did the same thing. And here's the dollar. Now, it has not lost its bullish embedded reading. The futures did, but the futures lost it today. They can regain it tomorrow. This market kept it. So tomorrow's the key day. If the red line closes under 79, traders will probably come out of it looking for a retracement to the 2862 area right in here. And if it can hold in reverse, then you put back in play the 2911 zone. And in the euro, you never did have that. You just turned up here in the FXE. Could be going to the 18-day average of close for the resistance. So interesting times, no question about it in the market. And one of the things I advise, if you'd like to learn more from me, in the mornings, I put out my morning subscriber videos. All you have to do is go to iraepstein.com. and take a look under the word research. Go there, get yourself signed up with it, and then the videos, you'll get notice from me. They're out, and away you go. And I cover daily, weekly charts, buy here, sell there, very specific as to what to do. And no, I don't walk on water. You will have losses, and I don't walk always underwater. You will have winners. So I balance the two. I don't want to, but that's how it works out. I'm Ira. You have yourself a good day. You can always move your cursor to the top here, and it'll take you to that area. Take care.